Can you explain where you see the financial advice industry going? Because you're at the coalface, right?
I think it's fragmented. It's going to split off dramatically because you're going to have the exit of bank planners, which I think is a really good thing. If you're a bank planner now, sorry, the jobs are not going to be there. But for the future of Australia, I think it's good that institutions are not providing financial advice. I think it's just too conflicted, and we need to cut that at some point. And so I think that's a good thing. And I do think that I think there'll be a high end, the 0.5%, not even the 1%ers, like the 0.5% or 0.25 or 0.1% will go to full service, well-structured financial advice groups that have the infrastructure to provide a gamut of services under one roof. But they'll have to be a bit smart and make sure that they don't do the wrong thing, because those things will come unstuck, as we've kind of seen recently as well. So those ultra ethical, high net worth businesses will do really well, because there will be a growing cohort that will seek experts and value time and value knowledge, and will pay for that advice. But you'll need a proper infrastructure. You can't just start a business tomorrow and try to compete there, because there's already established players that will do really well. But I then think there's going to be this huge gap, and I think that a lot of the time, especially unless compliance dramatically goes a whole other flip, and compliance becomes really easy and time, not very time consuming, it'll be very hard to deliver advice to everyday Australians unless compliance costs come down dramatically and it becomes much automated and much easier. So if that happens, then I think there'll be a role for advisors, but unless that happens, then I think a lot of advisors are going to struggle. And so, there'll be not really profitable businesses. And then I do think there'll be online players that really take off. I don't think robo-advice, I think everyone got scared about it, but really it's just an automated investment solution like an index fund that's, they're not that complex. And there have been commoditized, they're already there now, I think. But those robos are now attaching advisors on that you can basically have for 30 basis points or 20 basis points, and they can, talk to you about things. And
So kind of like a subscription, if you like.
Yeah, I think Vanguard do like personal advisor services, and I think Personal Capital do. I think Betterment tried it. I think StockSpot here are going to do it. I think that's the future of that kind of robo advice is cheap investment management, which is almost free. With an advisor attached via a webinar or something like a web kind of video sort of thing. But I don't think that's pretty boring. I think the next evolution of advice will be kind of AI sort of machine learning models that you can basically plug in your financial situation and it'll give you insights and say, look, you're spending this. Have you thought about doing this with your money? And it'll be a lot of general advice using data to give you ideas. You've got your super fund there, you're paying 2%. Why don't you put that into a low cost fund? You're paying 5% on your mortgage, you could be paying 3.5%. And would you want us to implement that? And then you'd say yes. And then they would spit out an automated advice document and help you manage that process through. So I think unless you are providing really value around the conversations in life, should we buy our first home? Should we move overseas? Should I take that job? Should I start a business? Should we have a family? These questions, if you're not expert in those type of questions and you're just selling products, the computer will do that.
Yeah. How far do you think we are away from having a solution that can kind of be more holistic than fragmented, like you said, in the investing piece, for example?
Good question. I was way overconfident with this stuff, and I think there's always overhype with technology, and then there hits this dip. I think Gartner do a really good graphic of that, and when new technology comes out, we think it's going to change the world, and then it kind of goes through this dip and then it comes back. I think we're in this dip where they're trying to figure it all out. So asked me 2 years ago, I would have said in 2 or 3 years time. Now I probably still think it's probably another 5 years away until we start to see this stuff.
It's kind of an exciting thing for consumers, I guess, and particularly people that haven't had access to advisors in the past, whether that be because they simply just don't have a trust, or whether they don't have they think they don't have the financial capacity to be able to just have a system that might say, read your bank statements and then just spit out some recommendations. I mean, that's pretty exciting for them, pretty scary, if, like you said, if you're just pushing products on the other side of the table.
Yeah, and I think think someone like Finder, for example, right? If they've got access to all the products there, And so if you just gave them your data and said, tell me what I need to do, and they had a machine chatbot that talked you through it and said, do X, Y, and Z, and it's going to save you Y. Do you want us to do that for you? Press your thumb here. Like I do think it's going to come. And so the only way to really stay in that world is to be the trusted advisor that's good at answering those big questions, because you can't put into that thing, should I have a family?
Yep.
It's too technical. It's too assuming, you know what I mean? There's just so much to it.